All right, let's have a real conversation. The Federal Reserve, the most powerful economic institution in the world, is on the edge of cutting interest rates again. And I don't think most people fully understand this. This isn't some technical move about numbers and charts. This is about the history, power, bad decisions, and yes, Trump's tariff policies is a big part of the problem. Let's break this down. Let's go back to 2008. The financial system was collapsing. Banks were failing. Markets were crashing. People were losing their homes. And the Federal Reserve stepped in under George Bush with an emergency rate cut and a new tool called quantitative easing, aka printing money to buy assets. Why? Because banks made reckless bets. They securitized garbage mortgages and sold them like gold. And instead of letting them fail, we bailed them out. No criminal charges, no real accountability. The Fed saved the system, but at the cost of creating a moral hazard, a system where risk takers can get rescued and regular people pay the price. Now let's fast forward to 2020. The pandemic hits. And here, the Fed was right to act. This wasn't corporate corruption. It was a public health emergency. Businesses didn't just fail on bad choices. They were shut down by the government. So the Fed slashed interest rates to zero again, launching a new round of QE and helped keep the economy alive. That was justified. That was humane. But now we're in 2025, and the Fed is stuck. Inflation hasn't fully gone away, unemployment is ticking up, and we're stuck between two fires: cutting rates and risk inflation going up again, or keeping rates high and hurting job growth. Small businesses and consumers drowning in debt, and here's the kicker: some of this inflation isn't even their fault. Let's talk about tariffs. Trump's trade war with China, imposing billions in tariffs on goods like steel, tech, and machinery, and everyday imports. And guess what? Tariffs are just taxes on consumers, not China. You and I pay more. Companies pass those costs along. Prices go up. Inflation rises. Inflation is just now getting baked in the system. And then what happens? The Fed has to respond. So now you got a central bank being forced to act on inflation that came from bad trade policies, not from an overheating economy. And this is the bigger issue. We've made the Federal Reserve into the de facto crisis manager of the United States. Congress won't act. President uses tariffs like weapons. Corporations chase profits without any accountability. And then when it all blows up, everyone looks at the Fed. But the Fed wasn't built to solve these problems. It can't fix inequality. It can't stop bad policies. It just pulls the same levers it's always had: rate cuts, asset buying, and bailouts. And the more we force it to clean up everyone else's mess, the more broken the system becomes. So yeah, the Fed might cut rates again. But ask yourself, why is it in this position? Because they never fixed the root problems from 2008. Because tariffs are short-term policies that are distorting the economy. And because we asked one institution to save us instead of fixing the system that keeps setting fires. Don't just watch headlines. Understand these forces behind them. But until we have real accountability and we keep printing money to fix problems that we refuse to fix structurally, and eventually that bill comes due.